You want to make changes to your life and get on the path to being financially free, but unfortunately, most people work against themselves by getting the order of investments wrong in the first place. Now, it's not intentional or anything like that, but it can absolutely create problems down the road and keep you from achieving your goals, or at the very least, it's going to delay them. So let's clear this up once and for all with what I think the optimal order of investing your money is. Because I believe everybody can have financial freedom and retire early despite all the lies that you've been told. So if you want to take total control of your life, I'll show you the very real alternative to achieving financial freedom and retiring early. So make sure you're subscribed, because they don't want you to know about this at all. They want to keep you working forever, and I want you to be completely free from all this mess. So the first thing you must do before you do anything else is create an emergency fund. Look, there's a lot of great concepts out there. There's tons of great investments to be into, and we'll talk about all that here in just a second. But if you cannot handle a basic emergency that comes up, medical bill, car breaking down, whatever the case is, the facts are, if you can't handle those little emergencies, it makes no difference, because you'll just be pulling from these investments and pulling from all these other places in order to make it happen. Or in a worst case scenario, you won't be able to find the money, period, and might not be able to actually pay that bill, maybe possibly ruin your credit, maybe a lot of other bad things like that. So you got to make sure you at least have a cushion to begin with. So that right there is where all your investment money should go first, is building up that emergency fund. Heck, I got it. There's all kinds of numbers there. 3 months worth of salary, 6 months worth of salary. But most folks don't even have just $1,000 there to just cover anything that may pop up. So maybe start with that right there, do some more study on what's appropriate for your situation, and then grow your emergency fund from there. But get that first $1,000 over there, just in case anything pops up, you have money to cover it. So once that's taken care of, you move up to the next level, and that would be you pay off bad debt. Now look, you guys know I'm all about investing. I have a whole nother channel that's all we talk about is investing specifically. But right now, there are folks out there paying 25%, 28%, maybe even 30% on credit cards and other bad debt like that. That is actually eating away at your money more than you're probably going to gain in the stock market this year or any other investment. So you got to knock that debt out first. I agree. If you don't have the bad debt in the first place, it doesn't matter. But a lot of folks have a lot of bad debt out there, and you have to clear that out, because any gains you're seeing in your other investments are being nullified by that 30% interest rate, or whatever the number is, 25%, whatever number you want to put there. So think about that. Sure, we all had a great year last year. I know folks that were up, more than 100% last year. But think about the year before that. If you were investing, you were probably down that year, in addition to the fact that, hey, you were also paying 30% of your money against that debt. So this year, even if you end up with a 30% return, which by the way is an incredible return in the stock market, it was nullified. Your return was basically zero because of that debt. So it's important and it's absolutely crucial that we eliminate that debt next. And then you can move on to number 3, which is employee match or other tax advantaged accounts. Now look, I know these weren't nearly as good as they were, a couple decades ago, but you are giving away free money by not taking advantage of any employer match that you have with your employer. Put that money there first, and then after that, look for other ways and other tax advantaged accounts to put your money in, whether that be, a Roth or a traditional. There are all kinds of other programs and tax advantaged accounts you can put money in. So maximize all those next is your next step in investing. Now, the next level after that is personal investments. Now, this can be stocks, this can be real estate, this can be other businesses, for example. But once you have your emergency fund, you've paid off all your bad debt, you are contributing the max to what you can in terms of your retirement accounts and other tax advantaged accounts. Now it's time to start investing in your own personal wealth building journey. Now, I think everybody should have real estate, if no other reason, just your home that you live in. Turn that into an asset that pays you. There's tons of other videos right here on YouTube you can search for that show you exactly how to turn your house from something that you pay into every month, that's something your tenants pay into each month, and you get to live for free, which of course, that frees up more money to put right over here in your stock investing. So now you got a couple things working for you right there. Now you have your house, that is an investment. It is going up in value, most likely. Now, very, very slowly. Obviously, 3% is kind of the number I use each year. And more importantly, your tenants are paying down your mortgage, not you, which is freeing up the money you were paying in mortgage and rent to put right here into stock investments that can now on average get you, 10 to 12% a year if you just put it in a simple index fund. So you can just do that. And then of course you can also look at starting a side hustle or something like that, which we talk about a lot right here on this channel, to increase that income even further and be another cash producing asset that's coming into your asset base that you can then distribute to your real estate, to your stock portfolio, or however you choose to use that money. So I'm going to do something a little bit different here. I'm going to give you guys a bonus level. Now, where you decide to slot this level depends upon your strategy, and it creates a lot of debate here on YouTube because there's a lot of folks in one camp or the other. But the bonus one would be paying off good debt if that's part of your strategy. Look, I know there's a lot of folks out there like me that choose to carry some debt, especially when you were able to refinance and get that low rate at 2.5%. It doesn't make any sense to pay it off at that stage. But I also can't discount the fact that, hey, going completely debt-free doesn't have its advantages as well. That's why I kind of choose this one as kind of a bonus there. If it's part of your strategy to pay that off and you've done the math on it long term, and that makes you feel more comfortable and allows you to maximize everything else, then paying off that debt that I would consider good debt may very well be a great strategy to move into there. Now, where you choose to kind of align it is up to you. Maybe it's the top level, maybe it's the next thing that you pay off. You want to get rid of all your debt first before you start investing other places. I'm not here to tell you whether that's right or wrong. I just know that that is an absolute viable strategy that you can use in order to actually continue to increase your wealth. The good news is this channel is all about alternative routes to financial freedom and retiring early. They want you working forever. I want you to be completely free from this mess. And I don't care that what we're talking about here is blacklisted by society. So make sure you're subscribed so that way you get this information, because they don't want you to know any of it and I want you to know all of it. So thanks for watching, and I'll see you in the next video.